Hey, welcome back to another weekly update. Today I wanted to talk about a stock that has absolutely been peppering the headlines last week. It's Australia's favourite buy now and pay later stock, Afterpay. So the app lets you buy goods today and delay payments for 4 equal sums. It's huge among the millennials. I think there's about 85% of the users are actually youngins. Right now the company has 2.7 million Aussie users and another 1.5 million users in the US. But all the attention recently has come from Visa and their recent move into the buy now, pay later market and what that could mean for Afterpay. So Visa is a huge company after all. They've got far more users than Afterpay. Their payment structure is so much larger. They also have more pull with merchants likely. So the fear is Visa might actually steal a whole bunch of Afterpay customers, or if they don't, then a whole bunch of small startups will follow Visa into the market and cause a whole lot of problems for Afterpay. But I think there's something that a lot of people are missing, including myself actually until recently. Afterpay is not really a lay-by stock. It's not really a buy now, pay later stock. What it's actually doing is it's a generation tool for other merchants, for other businesses. So it works a little bit like Google, where a business will pay for an ad on Google to draw traffic or eyes to their website or business. And the merchants essentially use Afterpay for the same thing. So they'll pay for Afterpay's merchant fees plus another little fixed fee on every transaction. And what that enables them to do is get Afterpay's $2.7 million Aussie users looking at their products. So the important part here, Afterpay is like Google where they control the customer relationship. So the millennials are choosing to use Afterpay because it's easy. They get upcoming payment reminders and they don't incur any costly credit card debt. They just pay late fees if they are unable to pay on time. So trust is a huge factor for Afterpay, just like it is for Google. First-time users might use it to manage their spending habits. Maybe they might buy a coat or some shoes, just try Afterpay out, see if it works. And then once they're more comfortable using it, they're happy to use Afterpay time and time again on different merchants across their list. Visa, on the other hand, they do not control the customer relationship. The people actually controlling the relationship in a credit card transaction, for example, is the bank. And the bank actually just uses Visa's payment network. So this is one of the reasons why I don't think Visa's move into the buy now, pay later market is all that bad for Afterpay, because the Visa users are actually users for the bank. They're not users for Visa, whereas Afterpay users are users for Afterpay and they continually use Afterpay. I also decided to ask 2 of our millennials here at Money Morning whether they'd switch for Visa. So first was one of our great content writers, Lee. And she told me she would not switch for Visa because she didn't want to go through the paperwork or the credit checks. She already had Afterpay. Why would she want to go through a whole process just to get a service that she's already got? I also asked one of our wonderful copy editors, Molly. She gave me more or less the same answer. She doesn't have a credit card and she wouldn't, again, go through the hassle of getting one when she could just use Afterpay already. I would also like to hear your thoughts. So would you switch for Visa, or do you even have Afterpay? Write your answers in the comment section below. Also remember to like this video and subscribe to our channel because that really helps us out. And thanks for watching. If you'd like to know more about financial technology companies, just click the link in the description box below for a free report. The report's called 3 Fintechs Breaking Up the Banks.